Well, this week's midweek reversal saw Bitcoin drop by a little bit over 12%, which sent people into a bit of a panic, and everyone is saying this is where the major correction is about to start. So what I'm going to do in today's video is take you through a recap of what the price did during the week, how it actually perfectly followed the model that we traded on this channel, and then give you an idea as to what that price action might lead into coming into the new week. So if you're new here, welcome. If you are returning, welcome back. Be sure to smash that like button and nice and early, and we're going to get into the details of this video. Now, what you're looking at here on this chart is actually a macro view. I'm on the daily time frame, and I did do a video earlier this week going through this in detail. It's important for us to keep up to date with what is going on a macro time frame so that we can understand where we are in the cycle and whether or not any bigger corrections really are due anytime soon. So when I zoom out on this, you can see the W formation. I won't go into it in detail because this was covered during the week, but I will link it up here somewhere and you can go and watch that video if you want the full details on how all of this works. But the moral of the story is that we have our daily time frame rise 1, we have rise 2, and we're currently in the rise 3. Within that rise 3, we expect 3 rises as well, which is what is circled. So I can see 1, I can see 2, there's a potential that this is 3, but because I don't have a stopping volume candle, which is a candle with a very large wick to the upside, that usually traps the final traders in the wrong direction before the market reverses, and I'm not seeing that on the daily time frame. So I'm really not certain that the pullback is coming, next week. I do expect a deeper pullback to come sometime in the next 2 months. I've spoken about that on this channel a lot, to look out for it, and if there are things you want to buy those dips. But is that now? Based on the daily time frame, I'm not really so certain. Like I said, I would have expected to see trapped traders before any kind of reversal. Now, is a stopping volume candle essential to create an M formation? It's not essential, but it is ideal. You do want to see who is trapped. You do want to clearly identify that before you expect a reversal. So it's possible that we do get a bit of an M formation form, which, it being the daily time frame, it actually could happen over the next 2 months, that we have this return to the prior high at around 73K, and we create a lower high. That would confirm that, this is looking like the M formation reversal's due soon. But at this point in time, the price is only retraced to the 20 EMA. And if we look back in the rises, we can see here that price has held the daily time frame 20 EMA since about $42,000. So if we're still holding it, still not a huge reversal warning signal, big deep retracement just yet. So now that we know that, let's have a look at the price action from the week that we've just had, as this can help to set us up for our trading when the market opens for the coming week. And we're going to do that on the 1 hour time frame. And you'll notice here I did this tweet. Actually, guys, right now I'm in Oman. So if you've never been to Oman, it is absolutely stunning. This is the view from my hotel, and stay with me till the end of this video. I will show you a little bit of a quick tour, but it's very, very quiet, very, very peaceful here. But this was a post that I did earlier in the week talking about the pattern that I trade and showing what I'm going to show you in this video, how it's played out so far. So this is the formation here when the week starts with a W formation or a bullish reversal formation, and that leads into our 3 rises. The midweek reversal kicks in and we expect 3 drops. So keeping this image in mind, let's have a look at the current price action on Bitcoin, and I'm on the 1 hour time frame, which is the best time frame to count your rises and drops for this particular method. And then when moving into actually trying to get your entries, the 15-minute time frame is going to give you the best entry with the best risk to reward. So when you start your counts, even though this is known as a 1 week setup, your count should always start from the peak formation high or low, whichever was the peak prior. And it's usually within the last 3 to 5 days of the new week that started. So if this was the week that we just had, 3 to 5 days in that period back, what was the peak formation? It was this one right here that happened last week, and that was a peak formation low. Now, this wasn't a W formation, it was a V bottom. They're harder to catch that actual trade, and they also don't give the best risk to reward usually because there's a very large wick. But you let the V pattern play out, you let that complete, and then your entries will be on retests of the 50 EMA. So somewhere around here was the best place to get entries. Essentially with a V bottom, if you do get the entry, unless you've seen a W formation on a 5-minute or a 1-minute time frame, you basically guessed, which is not skill. So leading on from that V bottom, we had this all through here was rise level 1, which was the second half of last week. And then we went into the weekend trap. The weekend trap, we know, usually just consolidates, and then the week opens with a false move, and the false move is designed to stop out the weekend traders. So price moved up during the week here, slowly, not much volume, but it was trending up, meaning long positions opened, and then if you can see right in here, we had this big stop hunt right here to the downside, and that wick right there would have stopped out weekend traders that were long, but it also would have triggered pending short orders. So anyone who had shorts under what they believed was support, they got triggered into a trade before price then moved to the upside rather fast. So that then led into our level 2 rise back into a retracement. This had some pretty high volatility during the week, was very difficult to trade it, but eventually after they stopped out traders to the upside and to the downside, they then moved into the level 3 rise, which also formed the first peak of the M formation. The second peak returned to the level, and then the price fell away. So using that same model, we had our rise level 1, rise 2, rise 3. Around the middle of the week, we saw the reversal, and that reversal took us into drop 1, retracement, drop 2, retracement, drop 3, where it currently looks like we may be seeing a bit of a W formation. Now, this W formation is interesting to me for a number of reasons. Number one, it's right off the 50% area of the high and the low of the week. So that is the highest point that price went last week, Sunday to Sunday, New York, and the lowest point that price went in the same period of time. And halfway between the high and the low is also an area that we tend to look for bounces and trend reversals. So this could be happening right now, that this may be a W formation. The only thing about it is it has not, at the time of filming this video, it has not yet broken the 50 EMA with volume. That is the blue EMA on my chart. So it needs to break that, then it needs to retest it. If it doesn't do that, that would be a failed W. And this could also be the false move week beginning that is a trap before the real trend comes in next week. So positives, looks like a W. It's off the 50% area. Negatives, it hasn't broken the 50 EMA yet, and we're in false move week beginning territory. When we go down to the 15-minute time frame, another thing that is important to take note of is what the price was at the close of US on Friday, because that price, whatever price does on the weekend, causes a gap. So this box here is the last candle, the last 15-minute candle on Friday, and right now price is returning to that as well. So it is possible that this is a false move. We didn't break the 50 EMA on the 15-minute time frame with volume. That's usually criteria 1 if we're going to have a trend change. So it is possible that we're coming up into here just to close the gap that's going to be formed over the weekend. And if that's all they want to do, it may head down further from there. Usually during false move week beginning, what we're looking for is an idea of who's been liquidated, because that's going to give us an idea of who also is trapped, because the liquidated people get wiped out and the trapped people get trapped into a trade in the wrong direction. So we use the open interest for that, and we're looking for a sharp drop. And this down here is the open interest, and this here would be the sharp drop that I'm talking about. So then once you find that sharp drop, what was happening on the charts at the time? It was a move to the downside, meaning it was liquidating longs and it was triggering shorts. So if the shorts are now triggered, that is a bit of a plus sign for a move to the upside. However, I do have to caution that we are in absence of a volume break of the 50 EMA. That could just be because it's a weekend. But if the trend is going to change from here out, then what will happen is price will retest the 50 EMA and hold it. And that doesn't necessarily have to be the exact 50 EMA. It's essentially going to be a higher low in comparison to these two lows right here. So as long as you get a higher low that holds around the structure, you would expect a trend change. If you don't get that, then what's happened here is that price has just crept up to close the gap. The gap won't close, however, until the market opens, so it is a little bit early. But following that, if price does not break above the 200 EMA, then we would assume that this move here was just a gap close, and we're probably actually going to head further to the downside at the start of the week. Now, if you're looking to trade with us right now, we actually have a private TTC OKX trading competition going on until the end of this month. So if you can trade on OKX, be sure to first of all join up to the exchange using the link down below, because that link there will get you 20% discount off your trading fees for life, which definitely adds up, but it will also get you access to be able to join the competition. I will leave the link below for how you can get in on it. Once you've done all of that, if you want to get the chart update so that you can trade along with us, then you can also join the Discord or get yourself a TTC membership if you're wanting to learn this method in full. And I will put all of those details down below. And as promised, let's check out the most beautiful Oman.